You've been watching decentralized finance for a while now. Seen some people make a fortune, others lose everything. You want to get involved now, but the complexity is insane. The risk, unbearable. Let's face it, you have no time to specialize in decentralized apps, and no money to lose either. Well, there is an easy way to earn returns from DeFi. A solution with no trading involved, no hassle. A place where you're always in control. Just deposit funds and watch your savings grow. We're talking about an app. We're talking about the Yield app. DeFi banking in your pocket.
Hi, everyone, and welcome to another episode of Fridays with Yield App. My name is Rebecca Jones, and I am the head of communications here at Yield App. Today, we are talking regulation. Is it time for the crypto industry to embrace regulation to go mainstream, or should it continue to live on the fringes and stick it to the man? I am joined by some of crypto's top legal minds. I have Jason Corbett with us here, who is the founder of Silk Legal Partners. Silk Legal, I believe. Excuse me, Jason.
Right.
Hi. And then I have Gordon Einstein. Gordon, tell
Einstein.
me how to pronounce Einstein. Is Einstein. Okay, thank you.
Yeah, no problem.
Thank you for joining us today. And I have Justin Wright, who is our COO and CFO, and you may recognize from previous AMAs. Thank you so much for joining us. So I kind of want to kick off this discussion by just discussing the current state of play in cryptocurrency on the regulatory scene. So of course, cryptocurrency was founded in 2009 with the birth of Bitcoin as a kind of anti-establishment, certainly anti-traditional kind of finance asset. And over the last 11, 12 years, it has evolved from there. So, I mean, would you like to start us off, Jason, with just where you feel we are at the moment with the state of cryptocurrency and regulation?
Yeah, so basically my kind of take on it is we've seen a lot of maturing over the last few years. And over the last, especially last year, we've seen a lot of institutional play come into the market. And with that, there's a lot more bigger money floating around and things are happening at a much faster pace. Regulators are basically finally catching up to what is actually happening. And they've been a little bit behind the eight ball trying to catch up on things because the technology and the market moves so quick. What we've seen over the last few months is the regulatory crackdown on Binance. So we've seen them basically back out of certain products they're offering in certain markets, whether that be their futures markets and such, and then also being charged in certain markets for unregulated activity, such as in Malaysia today, they were charged by the regulator there. So there's a kind of a massive kind of push by the global regulators working in somewhat of concert to kind of somewhat crack down on the industry. Be it that they're kind of one of the largest ones out there, they've kind of taken the brunt of it. But it's very important that the rest of the industry do pay attention and kind of see what is actually happening, because the wind is moving in a certain direction.
Right. Can we talk a little bit about Binance? Because not everyone might be familiar with Binance. So Binance is obviously the largest cryptocurrency exchange by trading volume anyway. And they have come under fire from both the UK regulator and the FCA. Justin, could you just maybe fill us in a little bit on the Binance situation?
Yeah, I think okay. I mean, yes, I agree with Jason. I think there's obviously a coordinated move globally by regulators. more to the point to take a look at the industry. And I think that's driven by a few things. And particularly if you look at DeFi and over the last 18 months, the real premise of DeFi is to effectively build a new financial ecosystem. So whilst you're basically taking products that exist out there today in traditional capital markets, everything from insurance and lending, peer-to-peer lending, borrowing, trading, futures, derivatives, now that this is a tangible way forward, it's up to the regulators and the governments to understand how they bring their oversight to this. So if you think about traditional financial markets, the rules have been in place for a very long time. And it depends whether you're coming at this purely from a financial regulatory perspective or you're looking at it from a prudential regulatory perspective. So
can you just define very briefly for us, Justin, the difference between those two things?
Well, you have your legislation very specifically around the types of financial products and expertise that are required to, manage exchanges, the people that have the businesses that take these products to market. But on the other side, and regulators always have to strike a balance between, that consumer protection, consumer protections, healthy competition in markets, education of customers, and then offsetting that against the other side of things, which has been driven by FinCEN, FATF, under things like anti-money laundering, KYC, counter-terrorism financing. So there's quite a few different moving parts in here. So I think if you take it back to Binance, for quite some time, they haven't really had a specific jurisdictional base for their operations. They have taken a lot of sophisticated products to market, and it looks like they're taking this seriously and reacting to this news to make these changes. But particularly, from a regulatory and a government perspective, it's coming through in the first instance in terms of these anti-money laundering rules. And I think that's really where they've kind of fallen foul for now. But of course, right, they're going to address that. They have a large business, and that's on them to make those changes.
Okay. So Gordon, we were talking earlier about the changes that are coming in the US, and the US is one of the fastest movers in this space, or certainly the kind of the most stringent. There's a lot of oversight coming from the SEC towards the industry. Do you feel that we are moving in the right direction, or are we seeing maybe?
No, I don't. And I wouldn't say that there's oversight from the SEC. I wish there was some oversight from the SEC. What there is this kabuki theater regulation where they announce an action against someone but fail to articulate usable principles in advance. So we're getting like a penumbra around where things maybe shouldn't be done, but no real clear dividing lines. And they came up with some digital asset categorization matrix a couple of years ago that was basically useless. So if you tokenize a bottle of beer and do nothing else, that's not security. Okay, well, that's helpful. Thanks. Okay, that's not, of course, the question. The question is when you create these sort of hybrid tokens or hybrid assets, or to what, is it like a barrel of water where you add one drop of oil and all of a sudden you can't drink it? I mean, you do add one drop of security and now this whole thing is a security, and it's not been helpful. It's not been helpful that we have 49 states with different money transmitter laws, plus a federal layer that should have been federalized a long time ago, like the securities law. It's just kind of stuck. And the comment I think we were discussing before is hopefully it doesn't get passed, but I'm afraid it will. In the new, I think, infrastructure bill just yesterday, the Senate added a rider in there that every crypto transaction over $10,000 would have to be reported to the IRS. Now, yes, of course, they have the right to do that. We were kind of alluding to this before, but having the right to do something doesn't make it smart. Right. Doesn't make it good policy. And we're in a anarchic, competitive international system with not one government, but with countries competing against each other. And for every time, it's like Star Wars. Every time, the more you close your fist, the more systems will sneak out of your grasp. It's like we're acting like Darth Vader and Princess Leia is running around in Dubai and Monaco, and South Korea and Thailand innovating. Right. So maybe no one gets that reference. I'm kind of old.
No.
So okay, yay, thank you. Okay, I was totally dating myself. Yeah, and then by the way, the new Star Wars don't even count. So it's a mess. I'm against money laundering, like I'm against kiddie porn. But the fact that kiddie porn exists doesn't mean that you ban photos from the internet. Okay, right. And that people use this sort of extreme reasonably rare, but not completely rare example, because I'm not denying the reality of these problems, to try to dragnet in all sorts of transactions that really shouldn't, if you're strictly looking at money laundering or strictly looking at some other violation, wouldn't be covered. But it's more like an informational, wide net that to catch these little things. But we lose privacy, we lose freedom when people have information about us. Privacy is a valid principle, and that's part of the reason why cryptos are popular. It's like, get out of our face, government, to a certain extent.
To a certain extent, but not to
a certain extent. I'm not an anarchist. I want I went back into law to make the world better, to make law better. I'm an advocate for law. I mean, that's why I'm on these shows all the time. I'm not billing. I want to make the world a better place. But part of the world making the better place is having intelligent policy. And just because someone can do something, that doesn't mean you do something. And there's usually more than one thing to do, and you need to balance and mix and be smart. So that's that's my rant.
No, I love it. That's what we're here for. But I think that kind of feeds into perhaps what we were talking about earlier on, Jason, in terms of the challenges of regulating the decentralized space, right? Because there are just huge challenges in an area that is kind of naturally resistant to regulation, and kind of how do you do that? Because there are so many, regulation is often a blunt instrument. So, I mean, how do we apply things like the travel rule to the decentralized space in your view? And can you also just expand on what that is for people that don't know?
So the travel rules, basically, FATF, the Financial Action Task Force, came out with this framework, which basically encodes the beneficiary details of a crypto transaction. So the virtual asset service providers can understand where the funds are going and where they've been, and put a name to it for taxation purposes and tracing purposes. When you go into DeFi, you're using non-custodial wallets, and that really doesn't happen there. And the technology they've developed around kind of this for kind of centralized exchanges and platforms, it's trying to work. It's rather difficult for it to make it happen because of the technology challenges and the way the industry works. And it's really hard to do with DeFi. One of the challenges they have basically creating a regulatory frameworks for DeFi is regulators basically try to regulate the intermediary. If you're a bank, they're regulating the transfer of money between people. When you're dealing with DeFi, you don't have an intermediary. You're dealing with a smart contract right to the individual. So there isn't anything to regulate per se, as a simplistic view. So it's a rather interesting conundrum they have.
Absolutely. I mean, Justin, to kind of come back to you and the general direction that we're going in, though, I mean, is it a good thing or a bad thing that we're starting to see more oversight in the space?
There's no one correct answer to that. I mean, just touching on what Jason said, I mean, ultimately, whether it's the government, the regulator, the financial action task force, they're going to come at this in a way that they can effectively have something tangible. So in the case of DeFi, it's going to be the on and off ramps. And I think, if you look at our business model, we've been obviously fully compliant from day one. We use a lot of technology and automation to make sure that we are meet our obligations in a licensing regime. But from our point of view, being CFO and DeFi, that's been a choice from day one. And it was very much because we had a choice. The choice we had was you're either fully decentralized and unregulated, or you are fully compliant with regulation. And I think, that middle ground that people thought may be possible has very much disappeared. And certainly over the last few months, you can see that, the gulf has widened ever further. You have to be one or the other. So it's a tricky choice because, when you go down the regulated route as a business owner or operator or an entrepreneur, the regulation puts up a lot more barriers in terms of being able to get your business up and running, build your customer base, to manage and fund your business. The flip side of that, of course, is, when you are looking to build a mass market business, there is a fiduciary duty and an onus on you as a business operator and owner to protect your customers. So, we've made a choice to go one way. Do I think regulation overall is good in the long run for the business? Absolutely. I think it brings the credibility that in time will attract, more traditional institutional capital outside of your hedge funds and your family offices. And I think for the betterment of the ecosystem overall, if it starts to strip away some of the malicious actors, some of the other underlying issues with fraud associated with the industry, even some of the technology risk, then I think that's a good thing. And just to touch on that one last point, I think there's a lot of misunderstanding out there in terms of, I see newspaper quotes and headlines all the time. And, the one that the governments and regulators love to go after is, cryptocurrency, Bitcoin is just this big dark pool of money laundering and fraud and, evil hackers and so on. I think, and we attended the annual review of the FATF updates a couple of weeks ago, and if you actually go through some of this data, it's less than 1% of all transactions in their entirety could be considered, fraudulent or criminal activity. So I think there's a bit of a misunderstanding out there, just how much bad activity there is even today.
Yeah, for sure. I mean, often if you want to talk about money laundering, let's talk about cash, because really, if you really want to money launder, if you really want to move some illegal money, you want cash. But Gordon, let me just
sorry, if you really want to move some illegal money, you want a bank.
Right.
Okay, because no, seriously, because if you look at Danske Bank in Estonia, they laundered 320 billion of illicit funds. I mean, if you want to launder money, have a bank. You had the Pakistani Bank of Infrastructure and Development that ran their nuclear program. Okay, and it's not a joke.
No.
That is how they do it. Now the question about whether regulation is good or not good is the question is this particular pizza good or is it not good? I don't know. Let me take a bite. Does it have pepperoni? Does it have onions? Yes. The point about you need to be regulatorily compliant in order to reach the mass market is currently true, and I applaud Yield for doing that. And I know you guys, and you're straight shooters. The problem is it's hard to be a straight shooter when there's 10 targets and they're changing all the time. So the onus is on the regulators to produce a regulatory framework that's workable, that's understandable, that's reasonably predictable, and I think entities like Yield and everyone else, they're doing the best they can in a shifting, unclear environment, and I applaud them for doing that. But there's not some golden palace of regulation where you can just walk in and everything was already built and the art was already hung on the wall and you can just walk through and enjoy it. Okay, right. That this is a plane being built as they're flying it, and people are falling out of the plane. So I'd argue that also, to make something predictable and knowable, yes, there's regulation, but there's also code. And to the extent that we're starting to build up these primitives of reusable code objects that are digitally signed and approved, we may get a new form of regulation that we haven't had before. Now, this is futuristic a little bit, but not very. Okay, this is within 3 or 4 years. It's not Blade Runner future.
Actually, are you looking when you say code? Do you mean you're looking at kind of like smart contract-based regulation? Like, what do you mean?
Yes, I'm talking about reusable software objects that are well vetted and open sourced and signed off on, forming the basis for the activities we engage in. And once you have those locked in and they're digitally signed, so you know exactly what you're getting and it can't be faked, then some of the need for regulation through the original methods can go away because it will be self-enforcing. That's where we should get to. Like the travel rule, to the extent you have software objects that are built in, approved, and vetted and not changeable except by public review, and it's just inherent in there, why do you need a regulation anymore? You literally can't do the wrong thing. And that can be extended to other things. That's where we should be going. And the jurisdictions that do, it's like, a contract that requests an audit every year. Well, if all your transactions are on a public blockchain, you don't need to wait every year. It's immediately available in real time to everyone wants to see it. So the old legalistic method, expensive, send notice, send your accounts, do all that other stuff, that's all gone. Yeah. And it should be all gone because it's a huge waste of time and there's a huge information gap and there's a time asymmetry there. So right. we should...
I think you're absolutely right, Gordon. I think you probably one of the only people I've ever known that made a golden regulation palace look glamorous for this type of thing.
Hey man, I just visualize you in there like enjoying your brandy.
I think you're absolutely right. And in time, the smart thing to do is actually adopt some of what this technology is delivering today and then wrap it into what you're trying to achieve. But of course, with all of these things, if you just take DeFi, I mean, this industry has moved at breakneck speed in the last 18 months. And every week we turn around, there's a new innovation, there's a new product, someone's building something new. This is the money Lego, this is the whole purpose. So on the one hand, I actually do feel a little bit sorry for some of the regulators because in the last 5 years, we've seen in different jurisdictions, the FCA, all around the world, regulators coming up with sandboxes because they do want to stimulate and create innovation in their markets. But of course, typically the law, legislation, financial regulation, moves so slowly. A DASC license application is a 6 to 9 months process. For 6 to 9 months in DeFi,
yeah, it's a very long time. I mean, if we look at how fast DeFi has grown over the past 12 months, it's amazing. And Jason, this speaks a bit to your point about like, how do we regulate DeFi? Are we going to have to regulate through smart contracts? I mean, how are we going to do this?
I think it comes down to a couple of things. One is having kind of the overarching principles of how these things should function with kind of market operators and people in the background that are doing good things. The other one is, like as Gordon says, is the code. Code can be law to a degree. If you have properly functioning smart contracts, they're able to execute properly and do what they're supposed to do and be enforced properly. That takes care of a lot of the issues. It makes counterparties responsible. The contract executes properly and it gets done what it needs to get done, and it takes out the ambiguity around any kind of bad actors in it if it works right. So I think you're going to see this kind of real mix of technology and code kind of in the next few years.
Most likely you're going to get a regulator like the MAS in Singapore that will look into this. But I mean, if you just look back over the last few years, the time it takes a government to move, a central bank to move, coordinate with the regulators, put together a central bank digital currency, speed is not in their nature. So,
except in China.
Yeah. Well, they're having a crackdown, of course.
I mean, do you know what? Let me stop, because China is such an interesting topic in this entire debate, because obviously China is an enormous growth market for cryptocurrency, and the government is taking this extremely sharp kind of crackdown on crypto. I mean, Gordon, what's your feel about kind of China and their agenda? Because there's all kinds of ideas.
I was very shocked to see China do something stupid. They rarely do something stupid, and the fact that they did this makes me wonder if I'm stupid, because they're such long-term strategic thinkers. I mean, they're playing chess and we're playing checkers. Actually, they're playing Go and we're playing checkers. It is in their long-term interest to disrupt the hegemony of the U.S. dollar and replace it. That's what they're seeking to do. And if I was them, I would seek to do the same thing also. They're not evil. Well, not evil because of that. Okay, but that's what they're trying to do. So they're trying to make a digital yuan or renminbi, take over. But until that, but there's a long time until that becomes the global reserve currency. I was thinking that they were sort of bringing Bitcoin because they were trying to kind of drain the gas and energy from the existing system, and kind of do what they always do, which is kind of fuzz up what's happening, so that they can start building their own alternative infrastructure.
And there's the potential transfer between their energy and the US dollar value, because the Bitcoin is in US dollars, right? But so what can be the current motivation for the current crackdown?
I think, the motivation for every single thing China does is the maintenance and expansion of the Communist Party's power. And I'm not even saying that's bad, but that's just how it is. It's like what Churchill said about Russia. If you want to, or actually, it was the guy who wrote the X memo. If you want to tease out why Russia's doing anything or during communist times, figure out what the Communist Party is trying to do to maintain and expand its power, and then the country comes second. I'm not even saying that's wrong, but I think for them to have taken the radical action they took, there must have been some threat to the existing economic players, the people that have political juice. And whether it's the energy or interfering with the currency transactions, or there was not too much privacy involved, I'm not quite sure. It was a strange move. And actually, to be honest, between that and Elon Musk's FUD a couple months ago,
right? Who knows?
I think we're going to head towards green energy Bitcoin, which is actually a good thing.
I mean, I'll just have I think it's an interesting one with China, because I don't think there's any right answer and anyone really knows. But I mean, if you look at shadow banking in China, which certainly over the last 10 years, I remember when the peer-to-peer boom was on, you had 3,000-4,000 platforms, and you're talking huge swathes of the economy going through these alternate banking system type operators. And of course they at that point they let it flow, it surpassed everything else in the world, and then as soon as it's at its peak, there was a big crackdown. So is there an argument that just the sheer volume and value of what was going on between mining, the transaction values, I don't think people like these things being outside of their actual primary banking system.
Right. I mean, we've actually just had a comment on our stream right now from a user saying China's had a huge capital outflow from crypto, so that could potentially explain.
I'm sorry. That always makes me laugh. The Communist Party is doing the capital outflow from Macau through gambling front ends.
Right. No, you're
okay. I mean, the problem is the wrong people were doing the capital outflow. Okay, the capital outflow is the whole basis of the Chinese economy. That's how they work with their overseas demographic. That's why you have in Hong Kong and even in Taiwan and in Canada and everywhere else. It's just it wasn't the way the Communist Party wanted it to be.
Sure.
Okay, and again, I'm not saying they're wrong, but that's yes, it's a thing. But they didn't kill crypto; they just moved it even further out of their control.
Right.
Bitcoin didn't go away,
not necessarily,
and they know that.
But let's not get too waylaid, and let's bring it back in. What I really want to get to the nub of before we end our show today is there are a lot of people in cryptocurrency that do not believe that regulation is a good thing, right? And I'd love to get your individual views on why you think regulation is a good or a bad thing for cryptocurrency and DeFi. Justin, let's start with you.
Well, I can't speak for everyone else on the planet, but ultimately, to be able to have access to an entirely new financial asset class and have some basic protections around it. I mean, I would lean to the view that if you've got nothing to hide and you pay your taxes and you want a nice, safe environment to be able to generate some income or interact with the space, then I'd be very much for regulation. But again, that might be a very narrow-minded view because people have very different views on privacy that aren't necessarily related to their financial portfolios.
And just to clarify before we move on, the view is that regulation will help crypto go mainstream, which will effectively support the ecosystem into the future.
Well, I think yes, but I think I'm framing this with reference to decentralized finance, because decentralized finance, by its very nature, is recreating an existing traditional or financial ecosystem, but on a blockchain. So that's why the regulation is always going to be much more attractive to it in this sense, because you have the passive income models and the derivative products and hedging products and lending and borrowing. This is so much of a leap forward in terms of banking and finance. You can't imagine that the regulators would sit back and just let it go.
Right. I mean, let's not forget that, on DeFi wealth management platforms like our own, but there are many others available. You can get an APY of up to 20% on a cryptocurrency that's pegged to a fiat currency. I mean, this sort of opportunity hasn't been available for a very long time. And, this is an extremely attractive one, but not to people that are used to a certain system. So, I hear you there. Jason, what do you think? Is it a good thing, regulation? Is it going in the right direction? Should we stop? I mean, what do you think?
I think it has to go towards some form of regulation. But the question is how overburdening that regulation is going to be, if so it is, if it is at all. There needs to be responsible people and responsible actions basically between players in the industry. And it really kind of needs something there going forward. But having kind of an overarching too much regulation, I think, is a bad thing, because the technology will just kind of change again, and they just kind of move forward to something else. So it's an interesting one. It's a moving one. The technology moves so fast in this space as well, and regulators have been slow to catch up. So it's a bit of a chicken and egg or cat and mouse deal.
Right. Okay. Gordon, I feel like you've got a lot to say.
Yeah, as usual. Okay, I mean, I guess I challenge the premise of the question, which is, is regulation good or bad for what? That's like asking, is a screwdriver good or bad? I don't know. Am I hammering a nail or am I screwing a screw? That the context matters, and you can have good regulation, bad regulation. Depends on the context of what you're trying to accomplish. So, to the extent that you're protecting people, promoting capital formation, stopping crime, facilitating, the taxes that the population agrees to pay, it's fantastic. To the extent it's preserving incumbent power when those incumbents have fundamentally, some of them engaged in some betrayals or, 2008 type stuff or inflation, it's not a good thing. You just have to use your brain and look at what are we trying. The thing is, you always begin with the end in mind. I'm going to channel Stephen Covey here. Where are you and where are you trying to end up, and what gets you there most efficiently with the least cost, and produces the best hit. Then you back into, how do I regulate this thing? So it's not good or bad. I'm sorry, Justin, I got to do it. This whole thing, do you have anything to hide? Yeah, that puts the onus on the person whose information it is and their life. I think the real question is, why is it any of your business?
I did
Okay,
say,
I don't
I
start
did
from
say it
the.
was one narrow opinion only, my own.
I know. Listen, I'm doing this because I like you. So and wise minds can differ. It's when you're talking on the individual. It's one thing when it. Actually, I was about to. What I was about to say was there's a difference between individuals and the entities, especially entities engaging in economic activity. Okay, it's natural to believe that the regulators and the taxing authorities should have more, and the criminal authorities should have more visibility into their operations because they're basically operating under a license from the government. Okay, they have the articles from the company. They're taking on certain additional privileges in exchange for certain additional obligations. But when you're talking about an individual in a polity who was born there and doesn't have a choice, I wouldn't default to they owe everything full informational access to the authorities that be. There is value to privacy. There is value to having your own individual sphere, and you don't just default to do you have nothing to hide because that's the way of putting people who don't know how to argue like me on the defensive. Okay, the real answer is get the hell out of my house. Where's your search warrant, officer?
Perhaps we ought to learn how to argue, and then we'll be better.
You should see my son. He's scaring me. He's actually scaring me.
Can we have a disclaimer that Gordon's views on China are his own as well?
Absolutely. All views are of the individual participants and not of Yield Dap.
Hey, I love China. I go there. It's great. But I'm just talking real, and I do it with them. It's fine. Anyway,
Okay.
So yes, every view's my own. I'm just some guy yelling in the desert.
Aren't we all? So we are at time now, guys. Thank you so much for joining me here on Fridays with Yield App. This has been Fridays with Yield App, and we are here every 2 weeks. My name is Rebecca Jones. I'm head of communications, and today we've been talking about regulation. Please come and join us for our next show. Thank you very much to Dr. Jason Corbett, Gordon Einstein, and
okay.
Justin Wright for joining us today on our chat about regulation. Have a great day, evening, morning, whatever time zone you're in, and we will see you next time.
Thank you.
Peace out.